those that can remember. And then zip-zap machines. I don't know, some of you also won't remember zip-zap machines. That's when credit cards were introduced. So what you do is you come into a store, they would put the credit card, zip, zap, okay, and you sign. All right. That was still offline, by the way. And if you know that there's no money in your credit card, you go there because they'll only most probably do a recon after 3-4 weeks and all of that stuff. So there was a problem with that. And I think that's what highlighted the importance of going online with transactions, okay? Then we got the first form of point of sale devices. FNB always defaults to speed points because they were one of the leaders in introducing point of sale devices, okay? Point of sale devices, speed points. One of the first ones was like big, like a typewriter. Why? Because it had a telephone line on it. So for the transaction to be online, you had to dial out once you swipe that card and all that. So then they became smaller and smaller and smaller. The cards as well started evolving. I think if you remember the first cards, Nextra, yeah? And then as technology advances, chip, okay? And then where are we now? You've got contactless cards, okay? Worse off now through digital wallets, you can now tap your wearable, your phone, your watch, anything that is contactless enabled. And then from a trends perspective, just 8 areas that we think are quite important from that perspective. So people want to have solutions that will enable them to pay across the border. That's the one. And then A2A, that's account to account. Previously, with the introduction of cards, everything runs on card rails. Whether it's Visa, MasterCard, it's card rails. But what clients started saying is that, listen, I want an alternative to that, where I'll be able to pay from one account to the other without touching card rails. So you have fintechs, as well as other financial institutions that are introducing solutions that will enable A2A, including instant payments, okay? So new players plus solutions, lots of fintechs that are coming into the area. What are they seeing? So I'll make an example. Investors don't just throw money for the sake of throwing money. There's a company that I've been following for a couple of years now called Yoko. I don't know if some of you know Yoko. Yoko looks at payments. They provide speed points, okay? But they've also evolved now and look at e-com and all that. Within a six-year period, Yoko has been able to raise close to 1.9 billion from investors. Investors believe in the dream of why payments is very important, why payments is very important for developing countries, and they are also believing the dream of the runway that they have in investing in a company like that. We're seeing lots of these different fintechs getting funding. They're also seeing the bigger companies now buying these smaller companies because they believe in payments and the dream that it includes, which includes in our case financial inclusion and all that. They believe in that because clients want that. You want everyone in the ecosystem so that they're able to reap off the different products that you provide. Modernizing infrastructure. So banks that started long time ago have infrastructure which is useful at that time, but over time it has to be removed. So we refer to that as legacy systems. Okay, FNB, just like nearly all the other older banks, are in the process. You can't keep up with what is required from a technology perspective if you do not replace that technology. That costs a lot of money as well. In fact, that's one of the reasons why the fintech, the newer players, are able to jump in, because they are able to be flexible in solutioning because they're using newer tech. But the older companies now are investing in making sure that they also replace those legacy systems and bring in newer tech. Okay. Cash to digital migration, it's happening. But the dream that we always have that there won't be any cash in the near term, it won't happen. There will be cash. What we talk about is decashing the environment. So as much as possible, provide the tools so that people will be able to transact without cash. Okay. But there has to be trust in the system. Why should someone take their money from under the pillow and put it in the bank? That's very important from a solution perspective. And I think with the discussions that we'll have later on, we'll debate that. And we'll also want some feedback from all of you in terms of what are your thoughts when it comes to that. Okay, new options for POS payments. I spoke about long time ago, typewriters evolving into speed point bricks, evolving into smaller speedies, and now having speed points on an application, on an Android application or e-commerce. You'll have that, okay? And then CBDCs. So with the changing landscape, digital is becoming very important. And I think globally, governments, regulators have seen how cryptocurrencies have taken off, blockchain. And central banks have also said, listen, instead of always printing money, let's also introduce digital currencies. So CBDCs are central bank digital currencies. And I believe in the near future, we will see that as well in our country. Okay. And then lastly, regulatory intervention. Zil will touch on that. Part of the changes that are happening are regulatory driven. And we've got examples of that we will highlight in about 2 slides. Okay. POS, I'll default back to POS again because I love it. Okay. So I've spoken about cash declining but remaining relevant. That's what we will see. Okay. But it's important that we continue to provide solutions that are contextual. We will see the environment being decashed, but it's not that cash will be removed completely. Okay. Digital wallets, I've highlighted that. Cards in different regions. So for example, in Europe, as I showed, cards are still dominant, but in Africa, we're looking at more digital wallets, but it's different flavors for different areas in the world. Okay, A2A, I've touched on it. Buy now, pay later. Okay, I just came back from the country to the country. Sorry, buy now, pay later. Is it happening in Eswatini? And what's the feeling of it? Buy now, pay later, where you buy and then they allow you to pay within 6 months. And all of this stuff. I'm a late buy. You come there, you buy, you go with the good, and then they allow you to pay within 6 months or that. What's the feeling? What we have seen globally is there was a big hype over the past 3-4 years, but it is subsiding. Okay. A lot of people, especially the younger guys, okay. The younger guys went in there, your Gen Zs, the iGens, want to jump in there, buy lots of stuff. But now you're starting to see some of those offerings struggling. Eswatini, do we need that? Buy now, pay later. We do need it. Okay. We do need it. I see Martin shaking your head. We don't need it. Okay. That's another form of debate as well that we'd love to have. Prepaid cards. Prepaid cards, what you will find is in other areas, maybe you want to give someone, so you load on a gift card. In other areas, people were going into, maybe someone who's new, Eswatini, they are worried about opening up a bank account. They go and buy a prepaid card. You'll be able to load some cash on there, use that app, and that card is useless. That's another area from a card evolution. And then the last one, e-commerce versus POS. I've mentioned that. So with the advancement in technology and the demanding clients, what you find is other clients want what we term an omnichannel strategy, where someone will want to look at something online, they go to the shop, just look at what am I buying, get a feel of it, but be able to go and complete the transaction at home or wherever else they want. So from a payments perspective, what is now required, if you look at that ecosystem, is you must be able to accommodate what is happening online or on an application to what is happening in the store. Further to that, what does that mean? It means now if you were checking a sofa online and you like it, and you go to the store, when you go into the store, you get a notification on your phone. The store, the sofa that you are looking at is actually located there. They've actually introduced the Black Friday discount for you on that one if you're interested and all that. And you might even find one of the assistants coming to greet you there and telling you about that sofa and if there's an alternative for that. That is omnichannel strategy. Why? It is contextual. It means you understand the customer, and customers are looking for people or service providers that show that they understand them. You're not just shouting a product at them. Okay. I think lastly on my side, just to give an example of 4 areas, we've covered this though. So in the UK, a developed country, we saw that they are dominated by cards. What are they looking at? They're looking at sweating the offerings that are based on cards, so the value propositions that are based on cards. Tap and pay, I see it's not that much in the country, but we will see it grow. So contactless, making sure that you're able to tap your card on a machine or any other NFC-enabled device. Okay, they are introducing, or they've introduced that in their transport system. Okay, in the UK. And then you look at the bottom, China. China has led the challenge when it comes to super apps with Alipay and all these other applications, making sure that they throw everything all into this one super app. Okay. Other fintechs are coming up with stuff, and the banks as well, trying to make sure that they include applications, more applications, whether bank-related or non-bank related. Why? It's going back to that concept of, listen, contextual solutions. What are the clients looking for? And you're able to then provide that. Key that you provide everything that is needed on that application. If we talk technology, it means that you introduce the concept of APIs, where you can't do everything by yourself. So you make sure that you have strategic partners that will plug into your platform to make sure that you're providing all these contextual solutions. M-Pesa, I think we're all familiar with the story of M-Pesa that was introduced in Kenya. What we've seen there with the M-Pesa solution as well is amazing. Started off as a remittance, where some people wanted to send money from the towns to the rural areas. But it's evolved now. It's a full-on financial solution. They've partnered with banks to make sure that they provide solutions for them. So this one, when you see the evolution of the payments landscape, has been led by the mobile operator. But in other instances, it's led by the banks. Whichever way, as long as we make sure that we're providing contextual solutions to our clients. And then the last one, which Zil will pick up as well, is in Brazil. In Brazil, instant payments were regulatory led, and when they introduced them, we saw a massive spike in them and catching up to what has been seen as dominated by credit cards and debit cards. So there's all these different movements. Some of them are led by fintechs, some of them are led by banks, some of them are led by the regulator. But at the end of the day, we are taking advantage of the technological advancement. We're making sure that we are meeting the contextual needs of the clients, and also making sure that we are aligning from a regulatory perspective in protecting our clients' data and making sure that we keep them away from fraud and all of those related cyberspace crimes. Okay.
first one would be, in our case, you talked about Kenya. In our case, is it the banks driving the apps, the development, or is it the banks that are initiating the process of innovating to create the products? And what is the contribution of the local participants in that, in terms of, do we have local innovators who are, jumping into the space quick enough and fast enough so that it's not importing a whole lot of this technology from outside, or are we still way far away from that? What is the sense, and is the whole lot of the products imported, or there's quite a sizable number that will be sort of internally generated, just to check where we are tech-wise with our gigs, if we still have in the country. This all depends on whether I have data on my phone. The cost of data. We are calling but the cost of data is an issue. Are you, or do you have a plan to sit with these data providers to say, look, while we want to make banking convenient, we need to make convenience for our customers affordable as well. And while they are in business and we are in business, have a partnership of reducing data costs. I know there is a regulator that is assisting on it, but they also have a business case to put forward to say, hey, infrastructure, this, now we're moving to 5G, we need to, get more
data. Actually, in SA, you have seen where the banks go and approach the MNOs and say, listen, it's an ecosystem play. Let's work together in making sure that we make it much cheaper for clients. In fact, in other instances, they even zero rate some of the transaction types that are going on to the app. No other than Meti, isn't it? There we go. Who will take us through, from a retail perspective, what are we thinking of in terms of collaborating and working with other providers in making sure that we provide contextual solutions for our clients? But powerful questions. Thank you.
To say, how do we collaborate, which is the mobile money side of things. We believe there are opportunities to collaborate. I can't share the details now because of the sensitivity of the conversations. Then the second area where we are looking at collaborating is distribution and channels. I'm sure you can see it's in Esnabo Cash Plus, MNOs and MA agents. And before you know it, they leave double MA agents. So there is need for us to collaborate. So we are also exploring that. Then I think the critical part is what you are talking to, which was relating to data, but Tennessee Bona more has access. We are looking at device financing, Nakona Labo preliminary conversations. I'm sure we are aware of what's in this market when it comes to financing smartphones, etc. There is not a lot of players who do that.
FNB is doing is transactions they call hanging, pending, that don't go, they don't take your money until it's a funny. Meaning in the process I'm living on a false belief what's in the market. We all want to move into this technological space. But I've suddenly realized you're not expecting one of the cuts in Sunday and the line in Tatimali, at least now I keep at the man. Naksala balance is real. More than we are pending, that man. Utahambala, that's a Savantana, so this it's a false reading that really I find what Nikulma behavioral penitence is. What is happening now is you are now forcing us to now change our patterns. So 3 days just to be sure what's the balance. I worry about this factor thing, particularly because some of us have come to believe this. It's all very nice for and we think they're solving it. How do 40 people all think the same way? Is there a godfather? And when senior executives and banks are not clear, we won't find out what's going on. And when a media house exposed, we see Ganga in money, na blame media, what's in Padela, what's in man. As a journalist, I really took exception to that. And even told the governor, this is not on. So, I think Martin raised the point, would say, we can't look after our man, Mbaba Fort. Help us to help ourselves. What is going on with that Uber exponent? This is not individuals. Who are these kingpins who are driving this thing? And you guys should know because you're watching this thing moving with your money solutions. I think you are culpable in terms of AI, because it is technologically driven and technology. You are culpable to this.
Let's start off with 100 rand, okay, in your pocket. It drinky, it costs as it's Coca-Cola 2 liter, maybe cost 10 rand. How many of those 2 liters will you buy? 10. Okay. Mangabe uyabona ukuthi you've still got 50 bucks in your pocket, but una 8 wema empty bottles na. Kusho ukuthini baba makhulu? Kusho ukuthi una nang 20 rand lengakakhiphi la. From a card perspective, there are 2 rules that happen. You authorize a payment, and then you clear and you settle. So when you go and you swipe, or you dip your card, or you tap, basically what you're saying is, ngibaba makubo, ngithenga na Coca-Cola ya 10 rand, okay? Please check with the store owner, or please check with my bank, kuti I'm good for the 10 rand, okay? What does check do? It dials, okay, the acquirer, which is the speed pointless lab, okay? It sends a message to the issuer, which is the bank which issued your card. It's nangbabe makubu udzinga Coca-Cola ya 10 rand. Unayo yini mali? Yes, unayo. Approved transaction. Not that that money is coming off your card at the same time. Okay. Now, at the end of the day, there is clearing and settlement, okay, between the banks. So it says, Nang Babe Makubu ute watata this, Nang Veronica ute watata this, Nang Lona lo ufige watata lo, okay? Then we say, yes, this is the list of transactions. Let's clear, which means we remove that money from the card, and then we settle the merchants, okay? And you take whatever fees that are there, okay? The issue that you sometimes find is, we spoke about connectivity, other issues with Ukanzabuti, there's a delay in settling, clearing and settling, which then says, yes, the bank has held lo 10 rand work. When I saw you on 100 rand, but we are to say 2 of a Coca-Cola. Okay. Then you want to now swipe. Very bad because I can see your money. Okay. So what normally happens then is, instead of having 2 transactions going, an oath and a settlement, what other vendors then do is they do it into one. Okay. So not dual messaging, single message that says, listen, send, puts it off, but at the same time, keep. Okay. So that's a good point to say, listen, each one I say, I'm not having better control of my money, so why don't you implement a system where you are also removing the money at the same time? Okay. But it was both accepted methods of transacting on the card rates. But it's a good point. And then the other point that you then raise. So
we can draw from that to say we're actually seeing it as what it cannot be that it's individuals that are disconnected. I agree with you. And taking it from that trend to say there is companies that are set up for the sole purpose of defrauding companies, defrauding people. The cyber attacks that are happening in other jurisdictions are connected to people that have set themselves up for that purpose. So what does it say to us? It says, and I think we are taking responsibility to say, if we were raising awareness, we need to do more. There's more that needs to go out in terms of educating our customers. And I agree with you to say that, yes, we have been led by the police because in our group where we work with the police. So when it comes to the outward messaging, it flows from the police. So I think we are just taking that responsibility to say that as banks we do need to do more, but it is a trend.